These markets feel unstable right now if you're not imagining it. Corn is trying to stabilize. Soybeans are drifting without conviction. Cattle pushed higher again. Hogs bounced, and crude oil is sitting near a level that could quietly change your cost structure. And that raises the real question this morning. Are markets stabilizing or quietly setting a trap for producers heading into spring? Because markets rarely warn twice. Over the next few minutes, we'll walk through grains, livestock, energy, weather, and the key developments shaping producer decisions right now. I'll touch the prices, but the real focus is pressure building underneath, where this could shift in your favor and where risk could grow quickly if momentum changes. Stay with me because today's bigger picture isn't just the one market, it's how they're starting to connect. Let's start with corn. March corn is trading near 426 and a quarter, still trying to stabilize after recent weakness. The market isn't breaking, but it isn't attracting aggressive buying either. Demand has improved slightly, but not enough to force rationing, and that keeps rallies limited. Here's the pressure point. Corn needs demand confirmation. If export pace improves, corn can firm quickly, but if buyers hesitate, the markets risk drifting sideways, and sideways markets tend to frustrate producers more than falling ones. Watch closely. If corn cannot reclaim stronger levels, funds may stay cautious, and cautious money slows momentum. Right now, corn is holding, but conviction remains thin. Now soybeans. March soybeans are trading near 1134, still hovering without strong direction. Beans are balancing South American supply pressure, uneven demand signals, and positioning from funds. Soybeans are not collapsing, but they are fragile. Futures have priced in improving demand, but shipments must continue proving it. If demand slows, confidence weakens. If demand strengthens, beans can move quickly. Soybeans are steady but vulnerable. Wheat remains the laggard. Wheat continues trading near recent ranges, still caught between global supply pressure and uncertain demand strength. Wheat hasn't found a bullish driver, but it also refuses to collapse. That usually means the market is waiting for a trigger. And when wheat finds direction, movement tends to accelerate. For now, neutral but alert. Let's move to livestock, where momentum strengthened today. Live cattle are trading near $242.60, pushing higher again as tight supply continues supporting the market. The core cattle story has not changed. Supply remains historically tight and demand remains steady. But here's the nuance. When markets push higher, volatility risk also grows. Funds still hold large positions in cattle, and if sentiment shifts, price movement can accelerate quickly. Cattle remain strong but increasingly sensitive. Feeder cattle are trading near $363.75, following cattle strength and remaining tied closely to corn and feed cost. This keeps feeders sensitive to grain direction. If corn strengthens, feeders feel pressure. If corn softens, feeders gain breathing room. That grain to livestock link matters right now. Lean hogs are trading near 92.22, bouncing modestly, but still lacking sustained momentum. Hogs continue balancing pressure and demand uncertainty. The risk is gradual margin tightening, not collapse, but compression. Now crude oil, and this quietly matters. WTI crude is trading near 62.25, holding in a range that keeps fuel and input costs relatively stable for now. Energy doesn't need to spike to impact agriculture. It only needs to move enough to change expectations. If crude strengthens, fuel and fertilizer pressure builds. If crude weakens, producers gain margin breathing room. Right now, calm but important. Let's talk about the weather because quiet setups often begin here. Over the next few days, the system is expected to move across the plains into the Midwest, bringing mixed precipitation, wind, and temperature swings. This is not a production threat, but markets don't wait for damage. They react to shifting expectations. If this pattern trends wetter, planting pace could slow later. If it trends warmer and drier, early fieldwork expectations increase. Right now, traders are watching, and watching often comes just before movement. And agricultural news is driving sentiment. USDA is proposing faster processing speeds for pork and poultry plants, a structural shift that could increase meat supply over time. Not an immediate mover, but longer-term bearish pressure if supply expands. Meanwhile, the U.S. cattle herd remains historically tight, continuing to support beef pricing despite volatility. Supply remains the backbone of the cattle strength, but momentum and positioning drive short-term movement. And finally, a large cattle investment fraud case made headlines. Not a direct market mover, but a reminder that financial discipline matters, especially when margins tighten. Together, these developments reinforce a broader theme. Supply remains tight, structural shifts are forming, and margin awareness is becoming more important across agriculture. So here's where we stand this morning. Corn is stabilizing but needs demand. Soybeans are steady but fragile. Wheat is searching for direction. Cattle remain strong but sensitive. Hogs are stabilizing but not strong. Crude is steady but influential. Weather is quiet but shifting. And the big question remains, are markets stabilizing or quietly setting a trap? We'll keep tracking it every day right here. This is Boots and Bushels, Markets Under Pressure.